Hey there, risk and insurance friends. Today we're going to continue on in our glossary series and cover the next term, policy limits. So let's jump in. So what exactly are policy limits? Well, in their simplest form, it's the max amount that an insurance company is going to pay for a covered loss. So think of it like a ceiling on your insurance coverage. No matter how big that loss, that insurer is not going to pay more than that predetermined amount. Now, policy limits can come in various forms, like a per-occurrence limit. So that's the max payout for any single incident. There could be an aggregate limit, and an aggregate limit is really just the total that the insurer will pay over the entire policy period. And that's usually a year. Sublimits, those are specific limits for certain types of losses within the broader policy. So let me break this down in human terms and give you some kind of real world examples. I'm living here in Charlotte with my husband and my 4 kids, and let's say that we insure our home for $300,000. Well, if a tornado decides it's going to come redecorate my house, the $300,000 is the max that the insurer is going to pay to rebuild, even if the actual cost to rebuild it is higher. Or think about auto insurance, right? I'm a minivan mom driving to soccer or football, whatever it is. And maybe I'm lost in thought, dreaming about property and casualty insurance and all the lingo that comes with it. And suddenly I rear end a luxury car. Well, yikes. If my policy has a $100,000 property damage limit, that's the most that the insurer is going to pay for the other car's repairs, regardless of their value. So I could really be out some serious bucks depending on the type of luxury car. Now, workers' comp, my baby, that's a little different. So you think about the medical benefits, there's really no limit, but wage replacement benefits often do have caps on them. So for instance, in the state of North Carolina, the maximum weekly benefit in 2024 was like $1,300. So even if you make $3,000 a week normally, you're only going to get $1,300 from workers' comp, those indemnity payouts, regardless of the actual worker's salary. So, why do policy limits matter? Well, for policyholders, it's all about making sure you've got adequate coverage. And for insurers, it's about managing risk exposure, and it's a really delicate balance, like trying to predict how much pizza my 4 growing kids are going to eat. And you might be thinking to yourself, Nikki, I'm not selling insurance. I'm selling products or services to make insurance companies better. Why do I care about policy limits? Well, it's a great question, and I'm glad you asked, because understanding policy limits is crucial for anyone looking to innovate in this space. And I'll give you a few reasons why, or a few areas. So think about product development. If you're creating risk assessment tools or IoT devices, knowing how policy limits work is going to help you design products that assist insurers in setting appropriate limits, or at least help policyholders avoid exceeding them. Another example could be in data analytics. So policy limits, as you probably know, are key in predictive modeling. So if you're developing algorithms to assess risk or predict claims, you need to understand how limits factor into that equation. Another example could be in claims processing. So maybe there's some of you out there working on claims management systems. Well, those policy limits are a critical piece of the puzzle in determining the payouts and managing those claims efficiently. And then, of course, you've got the customer experience. So maybe you're developing customer-facing apps or portals. Well, clearly explaining policy limits can really improve user understanding and satisfaction. Think about it. People are already in a stressful situation. Maybe the adjuster's not calling them back. So you could see how a solution could really be helpful there. The last example here is InsurTech innovation. So if you're a startup and you're looking to disrupt traditional insurance models, understanding policy limits is essential for creating new, flexible coverage options that are going to meet both regulatory requirements and customer needs. So here's a little insider tip from my Liberty Mutual days, and it's a no-brainer, but I've got to say it because we're talking about it. Insurers are always looking for ways to more accurately set and manage policy limits. So if your innovation can help them do that while improving customer satisfaction, then you've got a win-win. Go elevate that narrative, right? That's a really sweet spot. But really, policy limits are more than just numbers on a document. They're a critical component of the risk transfer mechanism that makes insurance work. For vendors and innovators, understanding policy limits isn't just about knowing insurance jargon, right? It's about seeing the opportunities to make insurance more accurate, more flexible, and more valuable for everybody involved.
Remember, in the world of insurance, limits don't have to be limiting. They can be the springboard for innovation that makes insurance work better for insurers, policyholders, and the people handling their claims. So until next time, this is Nerdy Nikki signing off. Keep innovating, keep learning, and never stop elevating your narrative. Bye.
Elevate the narrative. The insurance world's stuck in its ways, but we're here to elevate, turn a new page. Get ready for the positive change we'll make. The transformation has started, no more mistakes. For years we've seen this industry stall, working in insurers' potential. But those times are over, we won't be delayed. It's time to elevate, join the brigade. The old ways are fading, diminishing returns. We're lighting a new fire that passionately burns, fueled by innovation, creativity.